$300 trillion are about to flow into Bitcoin. Alone real estate is sitting at $370 trillion of total asset value. More than half of that, probably even like 80% of that, is pure monetary premium because people save their money there because they have nowhere else to go. My guest today, Rapha, spent the last 16 years in the TradFi system and is laying out the exact math today how Bitcoin is going to absorb the biggest savings market in the entire world. Even if Bitcoin just captures a fraction, a small fraction of that, it will easily 10x from here. And the market does not price that in at all. Enjoy. Before we get into all the topics, and I think there's a lot of interesting things today, I just want to get a quick overview from you of who you are and especially why you're excited about Bitcoin.
It's. I'll try to summarize, but I have a background in traditional finance. I worked all my career in finance, so I spent 16 years in New York City. Different trading desks, doing different things. So I worked at Goldman, worked at Merrill, worked at Deutsche Bank. Again, mostly on the trading side, then became an executive at the banks. So I saw the financial crisis. I lived through the financial crisis. I was at Merrill Lynch when it was sold to Bank of America. We went through, and we can talk about that because I think that's one of the key reasons why I became a Bitcoiner, right? And it's embedded in the Genesis block, and I lived through those dates where things were very, very close to collapsing in a big way for the financial system. The other thing I think that it's important about my background is that I was born and raised in Brazil. So I always get that, I had I'm very lucky to have been exposed to different things that primed me to become a Bitcoiner. Having spent my youth time in Brazil and grown here, we saw hyperinflation in a way that many people don't realize can happen, right? Literally money losing value overnight. So for me, the value of money, the properties of money that everybody takes for granted, were always seen as fragile. And that definitely shaped my understanding of savings money, how we put our labor into something that can be debased, right? That was something that growing up I couldn't really understand. And I think the other thing that actually primed me really well to become a Bitcoiner is the fact that I always loved technology. I've been, since a very, very young age, I like to code. I started selling software when I was, still a teenager. Always loved coding. For a long time, I thought I was going to work in something related to technology. I thought about going. I actually started computer engineering before I shifted to economics. And one of the key reasons why I shifted to economics was that I always had this lingering thought in my mind about, why is it that, we have a place like Brazil where we had massive hyperinflation, money would be debased like that. And you had other places like the US where the dollar at that point, and in Brazil, to give you an idea, like in the 90s in Brazil, real estate, cars, everything that actually was, a durable good, it was priced in dollars. So even though you would see prices everywhere in local currency, in the mindset of everybody was to fix everything to dollars because dollar was seen as like the base price reference, right? So this breaking of price because price is a signaling mechanism, right? And you've seen that breaking. Really, I think, shaped my mind into things that later on led me to Bitcoin. Then around, as I told you, I worked at Wall Street, saw the financial crisis, saw banks transform a lot through that period. So I remember, I was working at Merrill Lynch and I was going back home. I used to take the ferry back home. So I lived in New Jersey, so I was in the ferry, going back home. And I remember at the time we had Blackberries, right? Over in my Blackberry. And my boss, this was a Friday, my boss saying, well, come back, I don't know where you are, but come back to your desk. It was already late, like 10 p.m. or something like that. Come back to your desk because the bank is being sold this week and we need to finish a lot of things. And that literally Merrill Lynch collapsed, right? And was saved by Bank of America. We went through all of that. That transaction was done in a weekend. And following the months after that, I saw, so in Merrill Lynch, we had like two big trading floors. We had the third floor, the fourth floor. So the third floor was where fixed income traders were. There's a massive, and think about it like a football field of desks and chairs, right? In a period of like a month, that whole floor was empty. People were fired because the agreement was that Bank of America would actually bring their traders and they would keep the equity traders, but not the fixed income traders. So that, seeing how fragile the system was and how quickly it collapsed, also I think shaped my thinking a lot around Bitcoin. But as I said, I think, very lucky to have had, I think, the life experiences that I've had through then in around 2014, 2015, I started to look into Bitcoin. 2015 is really when I, started to dig a little bit deeper. Thought I understood everything. I didn't. I still don't. I think like most Bitcoiners, I went through like the capital sins of Bitcoin, not buying enough, selling too early, right? Buying other coins, but not Bitcoins. I went through all of that, like most people would. Learned a ton, but then, just to wrap up, the other thing, important to mention also, it's another. You look back in life, right? You look at these small things that happen, and you're like, wow, that actually shaped a lot in my life, right? Another one that was actually very interesting is when I started university in Brazil, economics. Um, the year that I started, it was a new economic school in Brazil that was founded by some people that came from Chicago Business School, right? And some of them had actually, it was not business school. I think Paulo Guedes was actually Chicago PhD. And when he started the school, his idea for the curriculum was to teach macroeconomics very differently. So they would teach Keynesian macroeconomics like everybody else, like every school, everywhere in the world, but they also taught Austrian school economics, right? And so we literally had like two different macro teachers, one teaching Keynesian school, the other Austrian school of economics. And that also, I think, opened my eyes to like a whole new set of possibilities of how things could be run, right? The fact, and this was, to put in perspective again, this was middle to late 90s. A professor saying that central banks could actually compete with each other, that you could have private central banks. In some cases, they could even issue their own currencies, right? People really couldn't grok that. They couldn't understand it. I remember the conversations, right, that they had, because they would debate. The two professors would also debate, which was awesome. And they would, this guy would say like, yeah, you don't need that. Why do you need the central bank? Why do you need the central authority, right? And at that time, even for me, that felt like, yeah, of course, Keynesian economics is the right way to look at this, right? Because you want somebody to have authority to do these things. You really couldn't conceptualize how decentralization could work in a way that I think eventually would get to where we are. And I think that's the beauty of Bitcoin. That's the thing that actually got me very interested, is to see how we can have a very decentralized system, with rules, not rulers, that would end up being the best savings technology that, in my view, has ever been invented, right? And then just to wrap up now, really wrap up. So I moved back to Brazil 2016. When I moved back here, I started two companies, a boutique investment banking company and a lending fintech. Both did really well. The lending fintech went through Series A, B, C, D. On Series D, SoftBank came in. I left the company, and then I said, okay, now it's the time for me to focus 100% on Bitcoin. By then, I was like completely orange pilled. And then I shifted my career to try to write more, talk more, research more, write more code, right, for Bitcoin and Bitcoin related projects. So it's a long way to give my background.
But it's super interesting, and I think it also kind of frames the most important perspective of you really nicely, with the Brazil background, with living through like the Merrill Lynch 2008 kind of crisis, living through also like giving you a lot of experience in the TradFi world. I heard you say in a podcast that you said Bitcoin creates I think is that Bitcoin creates a new marketplace for savings, something like that. I don't know if it's 100% correct. Is kind of that the main thought that you have around the thing that you've learned through the Brazil experience, through the Maryland experience of like where Bitcoin kind of is going?
Yeah. So let me see where I started. And there's a lot in that question. I actually saw that you were going to be talking, I think, in Prague about a similar topic, which is capital market, how this new concept of what capital markets are actually gonna be, right? And absolutely, I think a lot about two things when I look at the total addressable markets for Bitcoin, right? Two quick stories. One of them is when we look at Uber, right? When Uber really started going to market, and I remember actually seeing one of their first pitch decks, and this is online. You can actually Google it and find it. And on the first Uber pitch decks, they would have usually in pitch decks, you say, okay, here's our forecast, and to base your forecast, you have to say we're going to capture a part of the market, right? In the market, the total addressable market that they had at that time was taxis, right? They said, okay, we're gonna grab 20% of the taxi market, right? And Uber is going to be worth, I don't remember the numbers, but something like $1 billion, right? Because that's when we grab that market. What people didn't realize is that Uber not only did that, it captured that market, but it actually expanded the total addressable market, right? And when I think about Bitcoin, so that's the first story. The other one is Netflix. So Netflix did the same thing with Blockbuster. When Netflix started, right, everybody thought, well, they're going to be like the new Blockbuster, the same way that you rent movies, you're going to rent Netflix, right, at home. But people didn't understand that, the way that you were consuming content just completely changed. And you end up consuming much more content than you were. So the addressable market also expanded a ton, right? And it's also much easier for you to have, a device at home where you just click, log in, and watch a movie than having to walk somewhere. So the total addressable market also expanded substantially, right? So when we think about Bitcoin, and I wrote about this about 2 or 3 years ago, we should question what is the addressable market for Bitcoin, right? And when we think about valuation for Bitcoin, I think that's a very important question, right? Because a lot of people will tell you like, oh, Bitcoin doesn't have cash flows. How do you value it? I can't do a discounted cash flow model, which is true. And I don't think that's the right way to value Bitcoin. I think the right way to value Bitcoin is the same way that you would value assets like real estate, like gold, which they have two components, right? In the case of real estate, for example, you do have cash flows, but you have a second component, which is much bigger, which is the monetary premium that it carries, right? As I was saying, like in the 90s in Brazil, people would actually use real estate as a savings technology because we couldn't send money outside of Brazil, by the way. So markets were controlled. It was very hard to send capital to the US. So the asset that you had access locally was real estate. So with real estate, you could actually have something that long-term would protect your assets, right? So, and we see that up to today in different markets, right? So when you look at the price of a house, the price of the house that you're buying today, particularly in the US, right, where assets are massively monetized, part of it's the use case, but I would argue that more than 50% of the value, substantially more than 50% of the value, it's monetary premium. It's the fact that people are using that asset as a way to store long-term capital, right? Well, that's a massive market, right? 300 trillion or something like that in real estate, right? Gold is the same thing. The reason why you hold gold is because it is a savings technology. It is supposed to long-term to hold value in very, very long periods of time, right? So the addressable market for me in Bitcoin, it's the monetary premium that it would capture from these different markets, which would eventually lead Bitcoin to be, I think, the best savings technology ever invented. And then finally, just to conclude, right, when you get to that point, I think people today don't understand, and I can tell you again, I think I like to use Brazil case because most people look at the US as a reference for the world, but most of the world is developing, most of the world is not extremely rich, right? And there is a market unfortunately, for despair today, right? Right. And the market that grows the most in Brazil today is the betting market. So people bet on everything, right? So they will bet if you look at Brazilians, of course, love soccer. You can bet on anything on soccer games in Brazil. You can bet, when the first offside is going to happen, at what time, who's going to do it, right? It's crazy. And this is a market that is expanding, right? It begs the question, why is it expanding? And I think part of it is because, when you don't have a lot of, first of all, when your disposable income, right, after you spend everything is very little, and you're left with $10, $20 a month left after you pay all your bills. Of course, you want to try to, 10x, 100x that, because, otherwise you're really not going to get anything out of that. But second, which I think it's more important, people lost the sense of savings on a long-term time frame, right? So if you look at if they don't know that they have access to a very good savings technology, that if they put some capital in every month, even if it's small, and if they look back in 3, 5, 10 years, they are going to have substantial capital that they could use, that they could retire from, right? And by the way, we've seen this with Bitcoiners, right? We've seen these in past cycles where people have saved money, and how many times, even the memes of Bitcoiners even sell their chairs, right? We become much less sensitive to because we know that everything is priced in Bitcoin. Bitcoin is this new store of value, right? And this is the point that, I bring. I think we haven't even realized, even if you don't think about the expanding of total addressable market, right? If you just think about the current addressable market for Bitcoin, is already massive. When you start to think about the new savings market that will be created, right? And how, by the way, much better for humanity, right? Because not being able to save the fruits of your labor into something, it's a real problem for the world. So the fact that you now can store the fruits of your labor, your work time, the hours you work, into an asset that would actually have a possibility of, enduring long-term stability and value retention, and maybe even value appreciation, right? It's something that I think we really haven't priced in Bitcoin. And quite honestly, this is why I'm still extremely bullish. I think that even at current levels, right, you can put some numbers into it. If you look at some of these markets that I mentioned, gold, real estate, look at their total market cap, right? And even if you put probabilities, okay, let's assume, the real estate market, it's 300 trillion. Half of it's monetary premium. So that's 150 trillion of capital out there. There's just monetary premium, right? If Bitcoin captures this with a 10% chance, which I think there's much more than that, just in real estate, that would be a 15 trillion market cap for Bitcoin, right? So that gives you an idea of how mispriced I think these probabilities are. And thinking probabilities, I think, is the best way to think about pretty much anything, right? Absolutes are rarely correct.
I think real estate is such an interesting example because there's two things going on. There's like the Bitcoin trade going on, where Bitcoin is kind of sucking monetary premium out of real estate, which is like a natural thing. I've had probably like, at this point, 30 guests on my show that talked about how they sold most of their real estate for Bitcoin and why they did it and all of that. Like probably like even 50 guests or something like that from the 700 that I had on up until now. And then there's another thing going on, which I think Bitcoiners are not talking that much about. It's that the cost of real estate will go down drastically just of producing it. If you think about AI and robotics, there's this fun advertisement was going on, like I think 2 years ago, where a construction company said, ChatGPT, build me that building. And it was like an ad for construction workers to find jobs there as a kind of like a funny joke, like ChatGPT cannot build my building. But I think we are not that far away from robots that can do really nice building, 3D printing parts out and kind of constructing them on site, and kind of having a chat overview, having a chat interface where you can construct your own building, your own home, and then like robots coming and 3D printing this thing for you actually. And once there is no human labor involved in building real estate, the cost of building real estate will just drastically go down. I mean, that's the whole deflationary force. I think that's what Jeff Booth talks a lot of, like the deflationary force of technology in general. And this, I think real estate is the biggest example of how massive monetary value will completely shift from one asset to another asset, which is Bitcoin. And I think real estate is such an interesting example because it's so much, like it's what 370 trillion US dollars saved in there. I know Bitcoiners talk a lot about gold, but the goal is like what, 20, 30 trillion. And I don't think gold will lose as much as real estate will lose. So I think real estate is actually, for me, a more interesting example of how Bitcoin will revolutionize the whole asset class.
I agree. And I think there is two points to that. One, much better for humanity also that we're not pricing people out of real estate because they can't afford it, right? Because it became this monetary asset. And then a lot of, particularly the young people, can't afford real estate. That's a very bad outcome of the monetization for the world, right? For humanity in general, of the monetization of an asset that should not be monetized, right? Real estate should be where we live, where we spend our lives, where we grow our families, right? And that changed massively. I remember, growing up, like families in Brazil would have a house in the city, a house in the mountains, right? And it wasn't really, you didn't need to be like extremely rich for that, right? And today people can even own their first house, right? So I think the demonetization of real estate is good because of that. We also haven't talked about, there are other assets that are monetized, right? There are equities massively monetized, right? The S&P 500 became the monetization standard of equity in the world. And that's why the S&P trades at the premium of other equity markets, right? Bonds. So bonds are around 100, both equity and bonds are similar. So one is around 150, X around 150 trillion in market cap. And bonds is estimated to be around, another 130 to 150 trillion, right? These two assets are also primed to be demonetized because they were used as savings technology. Because again, you have the doctor works, he produces capital, he has capital sitting in his bank account. He knows that if it just sits there and if it's not invested, it's going to lose value a long time. It also created this other problem that I think everybody talks about it, but it is important to talk. That people that have nothing to do with investing have to start investing, right? So the lawyer, the doctor, the dentist, people that shouldn't be thinking about investing their money, they have to open accounts in Robinhood, they have to open accounts in Sharpe, whatever it is, and start investing their money. Because if they just leave it on their checking account, they know, conceptually, they know that, in a decade, 2 decades, that money is going to be worthless. And it's not, they think the money needs to work for them, right? They don't realize that it's actually the opposite, that the money shouldn't work for anybody, right? Money should be the store of value, should be the store of the fruits of your labor, right? The fact that you have to run after to make sure that your money works for you already shows that the system is broken in some sort of way, right? And to your point about Jeff Booth, yeah, absolutely. Technology is extremely deflationary, right? And it begs the question also why we haven't seen deflation and why do we continue to see inflation, right? And the answer is very simple: is that it's a money printing. People can press, it's costless to money print. You just press a button and there you are. You're printing money out of thin air, right? While in Bitcoin, and I can tell as a miner, right, to print money in Bitcoin, we have to spend a lot of capex in machines, buy a lot of machines, right? And energy as well. It's not free, right? And even in that case, even if I put all the resources of the world into mining more, I won't be able to print more because in 2 weeks the difficulty is going to be adjusted again on the Bitcoin protocol, and the same amount of Bitcoin is going to be coming out or close through every 2 weeks, right? And a block is still going to be coming out on average around every 10 minutes. So it's a beautiful system if you think about all of these things and how it contrasts with traditional financial system, right? It's much more fair, it's much more ethical, it's much more transparent. And the most important thing of all of these is that it's much more predictable, right? Not being able to predict what's going to happen is really what drives economic agents crazy, because you can't make long-term planning, right?
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works: buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug bullying whatsoever. I have been a long-term fan of Relai, not only because it's incredible, easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description. And once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi. It's so interesting. And coming back to this marketplace idea that we've started in the beginning, because I think it's really interesting when I now look at SDSC, and I was always like very much against buying anything outside of Bitcoin, but especially now with SDSC and Stretch and Strategy, it become more and more interesting as another tool in a toolkit. And not only as a Bitcoiner, but especially if you think about that whole attack vector against the fiat system. When you look at SDSC and the Sharpe ratio that it has, the return it gives you versus like an S&P 500 versus all the index funds and ETFs that are out there in the market, it has better returns and less volatility. And this is kind of because I was always curious, okay, if Bitcoin sucks the financial energy out of everything, like how is this going to work? Because people want to have safety, they don't want to have the volatility, and so they will always prefer an instrument that goes up 7% a year but feels more safe and calm, and it doesn't have that 50% drawdown and 60% uptick in like a few months time like Bitcoin has. And now like we have more and more of those like financial instruments around Bitcoin in the Bitcoin ecosystem. I think Stretch is just the most popular and the most known one. How do you think about kind of the attack vector that those Bitcoin related instruments are for that TradFi system that is kind of like very obviously attacking like S&P 500 index investors income? I mean, bond market looks ridiculous against Stretch.
Yep. Yeah. So people, as you said, people want certainty, right? So they value certainty a lot, even when, they may have the perception of certainty, when in fact it's not certainty, right? We as human beings, we're very, very bad in predicting this continuity. So we always think that, the next week is going to be like the last week, right? And, any big events are really missed. Nassim Taleb writes a lot about this on, Food by Randomness and the other books. And I think the good example that he has on the Black Swan is about the turkey, right? So the turkey before Thanksgiving has a beautiful life, every day human comes in, feeds the turkey, right? And the turkey doesn't realize that it is one day away from being shot and anything else being on your table, right? Nothing in the framework that the turkey had on their mind up until then made it thought that, the next day is actually going to be the fatal day. Just thought that next day is going to be the same thing. You're going to have food on the table. And so we're very good in predicting discontinuities. And I think and because of that, as we were talking about certainty, we place a premium on what is perceived as certainty, and we place a discount on volatility, right? Volatility is not inherently bad. Volatility is actually a good thing, right? And I think when we look at Bitcoin and the fact that we still have volatility is actually extremely healthy, because what it means is, Bitcoin exists in this kind of like almost Schrodinger-like world between massive success and failure, right? So we have all these people that say Bitcoin is going to go to several $1 million, right? It's going to capture all the monetary premium, all that we talked about. And at the other hand, you have people that still talk Bitcoin, it's worthless, governments are going to ban it, there's no way this is going to take off, right? And it lives in this kind of like interposition of narratives all the time. I actually wrote, actually very good to go back to, I think, what we were talking about. I wrote a model a few years ago. It's called the Schrodinger model of valuing Bitcoin, which is exactly that, right? You get like, because what made me really upset back then is that I remember listening to this podcast. Again, this was like 3 years ago. MicroStrategy was just starting to kind of take off. And in the same day, coincidentally, I remember watching a YouTube podcast of Michael Seyr saying, yeah, Bitcoin is going to go to hundreds of millions of dollars, right? It's going to be massive. And then it cuts to like the next podcast or the next clip that was this guy, Dan Pena, where he's crazy guys yelling, Bitcoin is going to zero, Bitcoin is worthless, right? And then it made me realize, like, neither of them are probably right because they're absolute. So how do you, if you need to put probabilities to both sides, right? And then you can actually get to a sense of what the real price is. And volatility is born from that, from the fact that we are oscillating between, kind of like the two worlds where people are going. And when we're having the bull market, everybody is on the Michael Saylor camp, right? On the bull market, the chance that this is going to become the real assets, we're going to see hyper Bitcoinization. It's 90%. This is going to happen, right? And then that drives price up. Again, euphoria, get everything that we know, right? And then you have markets right now in despair, right? Where everybody's saying, well, price is not going to go up, right? AI HPC is the new thing. Everybody's going there, right? Why would you own Bitcoin? So you start, the governments are going to ban it again. Like, we start hearing all these narratives, right? And this is what really drives volatility. So the more volatility you have, the more disagreement you have in the system that you're oscillating between each other. And you want that because it means that, if you are in the camp that values this, that sees the potential upside of this asset, right, you have much more chance of actually capturing a lot of that upside. And until Bitcoin becomes a extremely widely adopted asset, right, the growth rate, the volatility is still going to be very high, right? The growth rates are also probably going to be very high. There's going to become a time. Let's say we wake up tomorrow and the whole world already has Bitcoin in their portfolio, right? Bitcoin is this widely priced asset. We use it as a price for reference for everything. Volatility is going to naturally subdue, right? Because then it became the price reference of everything, and it's probably going to grow maybe as demographics grow or something like that. But then you're not going to have the potential massive upside that you have now. And that's fine, because at the end of the day, right, what it will do is store your value for the long term, as it should. So the point is, again, that volatility, I think it's a good thing that we have. Just going back, I think, to the part of analytics, Sharpe ratio, and portfolio allocation that you mentioned, right? This was and the biggest challenge I had when talking to institutional investors about Bitcoin, particularly around the 2016 to 2020 timeline, was they couldn't understand it. They couldn't look at the asset. They had all these preconceived notions that how come I can own an asset that is going to be banned, that it's illegal, right? So I started having conversations about just looking at the risk return characteristics of the asset. and say, forget everything that you know about Bitcoin, right? Just look at the risk return, look at the correlation that it has with the major asset classes, look at the potential return that you had in the past, and look at the volatility, right? So when you talk about Sharpe ratio, you're basically just looking at the return. You're normalizing it through the volatility, right? It's the amount of return that you get for a unit of risk that you're taking. Their case, they said, yeah, it is a risky asset. It is an extremely volatile asset, but you're getting compensated for that because the units of return that you get for the units of risk that you're taking, it's much better than bond markets. It's much better than equity markets, right? So you should value it. The right approach is just not to have anything in your portfolio. It's just to size it properly, right? So if you don't like volatility, if you don't like, that an asset can go up 50%, down 50%, just don't put your whole basket of assets into it. Size it appropriately. Put 5, 10% of your portfolio, but 0 is the wrong answer, right? That's the only answer that is the wrong one. And that started to get, I think, people thinking about, well, maybe as an asset, there is a place to include this in my portfolio. And instead of thinking about, in absolutes, like, yeah, this is going to create a lot of volatility, just size it appropriately, right? Put 1% of your portfolio, right? There was a conversation we were having. I remember this now, like with Dom Bay, who talks a lot about pensions and different things. And about 2 years ago, we started having this conversation about pensions putting Bitcoin in their portfolio, right? And it was very conceptual. Say, okay, let's look at some of these portfolios of pensions out there in the US, and let's just simulate and see what would happen if they put 1, 2, 3% of their allocation to Bitcoin. We did some historical analysis, right? And of course, the answer was always that it would add a lot. Not only would add returns, it would decrease the overall volatility of their portfolios because it's an asset that it's uncorrelated with what they had already in their portfolios, right? And then it becomes not so theoretical because we did this, a few years ago. That 1% would actually have grown to 2-3% by itself, right? Just because of the asset appreciation since then. When we were talking about this, Bitcoin was like at $20,000, right? So even if today's dropped down, it's already that's already 3x from what it was at that point. So I also tell a story, which is I had a friend that invested a ton in hedge funds in the past, and again, this is back a while, but I told him, like, you need to invest in Bitcoin. I've been talking about Bitcoin for a while, and he couldn't get around, the fact it's like, oh, this is so used for money laundering. Governments are never going to allow this. I don't even want to see it, right? And then I showed him just the returns of Bitcoin the same way that he would show the returns of a hedge fund manager, right? So, okay, here are the monthly returns. Here's the annual return. Here's the drawdown. Here's the volatility. And he, without telling him it was Bitcoin, right? And he looks at it, it's like, oh, I actually like that. I think I should include that in my portfolio, right? And it goes to show that, transparency sometimes is a bad thing, because in the fact that he knew all these things made him have all these preconceived notions in mind. And look how crazy it was. If it was a hedge fund manager that wasn't even telling him what he was doing, right, he would invest in him, right? Goes back to the original point, between Keynesian economics and Austrian school economics. Sometimes we as humans, we think, oh, it's better to, give the power to somebody that they would do it. I abstract it away. But a lot of times that ends up with, if you have the wrong incentives, that's going to end up with with the wrong outcome for you, right?
I love also your point about the haters and the volatility, because I strongly believe that everyone that hates on Bitcoin, like the Dan Penner that you mentioned, that says like, oh, if you knew who is behind Bitcoin, you would sell it, which is a hilarious thing to say because it's open source. But that's a whole nother podcast. But the fact that Bitcoin has so many passionate haters, and I'm like really sometimes wondered where they come from, if it's just bots or if there's like actual people that do that. Because I have, especially now in the bear market, every video people that keep on coming back to my videos, and I only talk about Bitcoin. They keep on coming back to my videos and hate on Bitcoin, and I'm like, why do you keep watching it? Like, why do you keep like engaging with Bitcoin content? Because you engaging with Bitcoin content drives this Bitcoin content to more people. So you are actually hating on Bitcoin actually promotes Bitcoin. And so I think the hate and the love and the volatility, that all drives interest, which drives volume, which drives money, which drives the Bitcoin price over a long period of time upwards. Which that's why, like, if people say like, oh, do those haters like, is that bad? Like, does it bother you? I'm like, that's actually good. Like, not only are they driving my own channel and the media up, but like more importantly, they drive Bitcoin up because
Yep.
they bring more eyes to Bitcoin. I had this great example I was in university in Austria for like half a year before before I said goodbye to university. But I was in there and there was an IT security course, and the professor always started with Bitcoin for some reason, and he hated Bitcoin like very deeply. And he introduced Bitcoin to every single student there. Even it wasn't a bad way, but he had no reason to even mention Bitcoin at all. But he always talked about cryptography, and then like, yeah, but Bitcoin is really bad. And I'm like, okay, like he makes sure that everyone knows about Bitcoin. If it's a bad way, but it's publicity. Like every publicity is good publicity. There's a saying like that. And so I love that point, because I think Bitcoin is one of those assets that I rarely met someone that is neutral on it. I rarely met someone like, oh, I don't care about Bitcoin. If I meet someone on Bitcoin, he either has a positive or negative opinion on it. And this is what is good. If we have a bunch of people just being neutral on Bitcoin and nobody cares, that would be more of a red flag than like people hating on it.
Completely agree. Again, this proves why we have volatility, right? Because again, we have these massive camps, and they are at 100 and 0, right? So if you had more people in the middle, then you would have less volatility, right? It would have consensus in the price, into the mechanics, and price would converge somewhere that it's between 100 and 0, right? But right now we don't have that, and it's a good thing. It shows we are super early. That's the other thing that people ask a lot. It's like, oh, but the price went up a ton. I wish I bought it at $1, at $10, at $100, at $1,000, at $10,000, right? The reality is that it's still, when you look at the numbers that we've talked about, it's still super early. There's still massive potential upside from where it is right now. And yeah, I think that's the part that it's completely missed by many people. So.
Absolutely. How do you think a financial system, because like as you said, now we're early, we're having this like small like marketplace of things that are kind of slowly popping up, like the strategy and stretches of the world. But how does a financial system actually looks like when Bitcoin is not a $2 trillion asset, but like 20, 200, potentially even like $300-400 trillion asset going forward, where it's more of a base layer for the whole financial system? How do you imagine that financial system looking different to what it looks now?
Yeah, I mean, there are a lot of similarities that we're gonna see, but I do think that your price references are gonna be much more stable, which is extremely important. Price is signal, right? Price is the way, it's the universal language of how you can signal value. That being stable, I think it's much better for everybody. We're still, a lot of people debate about how debt markets are gonna look. Are we still gonna have debt markets? I think we're always gonna have debt markets, right? Because if you're holding Bitcoin, there is going to be a new idea. There's going to be a new business. There's going to be something that, in your mind, as an entrepreneur, it's still going to be better than Bitcoin in the long term, right? And as you get that stability, then your willingness to actually lend your Bitcoin to somebody, the same way you lend dollars, right, to somebody out there, it's going to create a marketplace for that. Today, I don't think it's worth it. And I think that, people look at it and say, well, why would I lend my Bitcoin? Because I can't find any. If Bitcoin is my benchmark, very few things out there are probably going to beat that benchmark, right? And that naturally creates a lack of that market, right? Because we, as Bitcoiners, true Bitcoiners that really believe on this, we're not willing to lend our Bitcoins for anything. It needs to be something extremely, extremely good. But as again, as we discussed, we get closer and closer to like the 100 that we said, then your benchmark also, your hurdle rate actually goes down, and you are going to be willing to lend your Bitcoin. I think that's 30 years away from where we are right now. I think it's going to take a long time, right? But eventually it will become, I think, the reference. Bitcoin is the best collateral ever invented. It's you have daily liquidity, you have on-chain transparency, right? You have full transparency on what's happening. So eventually, it's much better collateral for lending than anything else. Quick, funny story. So I've been having I worked at Goldman for some time, as I mentioned. And when I was on my previous company that I started, which was, as I mentioned, a lending fintech. So here's what we did. It was a fintech that lent capital to individuals in Brazil, right? So I don't think there's anything riskier than that. It was unsecured credit to individuals in Brazil, in Brazilian reais, right? And this was 2019, when the country wasn't really wasn't bad, but it wasn't like in this great time, right? And at that time, I went to Goldman. I said, okay, we're raising capital for a credit fund. Are you guys interested in that? And, they eventually got around. They invested. They gave us a line of credit for lending in Brazil, right? Fast forward a few years later, I go to the same guys, right? I say, okay, I have Bitcoin as collateral. Now I'm running this Bitcoin company. I want to do something linked to Bitcoin. And they're like, no, we don't want to touch Bitcoin. And they're like, guys, you were lending to like unsecured credit in Brazil, like probably the riskiest asset that I could ever think about, right? And how come you can't conceptualize that Bitcoin, again, you do 50% LTV, your risk is that Bitcoin price goes down by 50% overnight. Do you understand what's the probability of that happening, right? It's you're talking about 0.00000. I don't know. It's like very, very far off. And if that's the risk you don't want to take, there are ways to hedge that risk, right? What's the concern? But they couldn't break it down. They're like, no, but Bitcoin is very risky. You're like, no, I'm telling you, it's not. I'll show you like on math that it's not risky. Like, and then eventually you say, yeah, but it's a very hard conversation to bring in internally, right? If I go to an executive committee here, I'll have to explain all of that to my boss, to my boss's boss, right? To the executive committee of the company, and they don't even want to hear, right? So all of that is going to change also. I mean, I think eventually we are going to see, markets developing on Bitcoin, on credit that we don't have right now. Is that going to happen overnight? No, it's going to take a long time, right? But part of that we're seeing already. If you told me, I don't know, 3-4 years ago that we would be now in 2026 and we would have a Bitcoin ETF that Fidelity would be showing it to their clients or portfolios, right? And anybody could buy it in a brokerage account, that the president of the US, whether you like it or hate it, it doesn't matter, right? To just proof of discourse, that would be talking about Bitcoin, right? That leaders in the world would be talking about Bitcoin, right? That institutions like BlackRock would have their most successful ETF would be a Bitcoin ETF, right? I would have told you were crazy. Like there's absolutely no way that was going to happen, right? And that was just 3-4 years ago. And here we are, right? So I also don't want to underestimate the potential of things just accelerating in some sort of way at some point, right? Particularly as you continue to see all the flaws that we have in the current financial system, that they are undeniable and they affect everybody, right? So as more and more people, I think, come to the conclusions of everything that we're saying, I think we are going to be seeing this being driven faster and faster, right?
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. demonetized. And by the way, you get KYC free Bitcoin. That's why I use simple mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. It's super interesting. And you mentioned it before, the Brazil, where you have tried to do this, where you have got that lending platform, and you also are originally from Brazil, and you mentioned that soccer example, I think, before, of like betting on soccer, and there are a lot of soccer things going on. I'm really curious because I think most people that listen to that don't live through hyperinflation. Like they mostly probably are in the USA, in Canada, UK, Australia, Europe, somewhere like where there's not a hyperinflation going on. Yes, inflation is still bad, even if it's 2%, 5%, but it's a very different situation if your inflation is 5% a year, or if it's 50 or 100 or even over 100% a year inflation, sometimes even 100% per month, depending on how bad of a situation you got to be in. How does the money and the inflation and the currency that you have changes human behavior? And what have you kind of seen between living through hyperinflation in Brazil versus living in America, where there was no hyperinflation? There was inflation that was high, but like not hyperinflation.
Yeah. Uh, a lot of people say, and this is a point I disagree, that like, oh, it's better to have 2 to 5 inflation than hyperinflation. I actually think it's worse, because when you have hyperinflation, it's a shock. It's a shock to your reality. You need to act. You need to do something, right? It's a survival. If you don't do that, your money literally loses value overnight, right? Now, I do remember, like, you can Google this. There are several stories about this. Like, my mother giving me money in the morning, saying, "Oh, you're gonna buy your lunch money at your lunch at school." And she would say, "Don't bring any money back. Spend everything. Even if you have change, buy a candy, buy something, because if you bring money back, money is going to be worth less tomorrow than it was worth today," right? Then when you live in a situation like that, you have to adapt, right? People would go, it's crazy that there are things that even today you see in Brazil that were derived from this time. So paychecks were paid on the 31st of the month. On the 1st of the month, the next day, you would have supermarkets packed with people. Everybody would go to the supermarket, spend their money, buy everything, like several shopping carts of foods, groceries, because they want to convert their into hard assets, which for them was food, right? Because if they waited 2-3 days to spend that money, the capital would be worth less than it was before. So you go, here where I live in Rio, you still have these massive supermarkets around. It's a legacy of that time, that they needed to be massive, because on the 1st of the month, everybody would come in, would buy food, right? And then the rest of the month, the supermarkets would be empty. People are not, or would be much less packed than they were in the beginning, right? There are elements like of human, massive human psychology and damage that you see of that. And there are good things as well, right? You look at, it's worth watching the Ayrton Senna documentary on Netflix, not the long one, the one that it's short. It's only one episode, the first one that came out. And there they show, how Senna became like this massive idol in Brazil. And in the time that he was racing, and really, winning all the races, all that, of course, he was a phenomenal driver. But on top of all of that, Brazilians had no hope. There was nothing inside the country that actually gave them pride to say, I'm Brazilian. That was the first, thing that for them they could say globally, like, oh, I'm very proud of, something that Brazil is bringing to the globe. When he passed away, Brazil stopped. The stock market crashed the day that he passed, right? So that's how embedded and how important he was, I think, for Brazilian culture. And look at the videos of when he passed. Like, the country literally stopped to pay him homage for everything that he did for Brazil. And that's a reflection of the lack of hope that the people had, right? Now, this is, of course, it's a shock to the system. People need to adapt, and I think a lot of people really adapted on that. When you live in Europe, when you live in the US, where you're slowly bleeding, right? You're bleeding at 5%. People don't feel, they kind of know that if they leave the money on their checking accounts, long term, it's going to be worth much less than it is, and they need to invest, need to do all of these things. But it's a little bit like the frog on the boiling pan of water, right? The water is gradually getting warmer. You're not feeling it, right? You're still gonna die. You're still gonna get cooked. You're still gonna lose all your assets, right? It's just gonna take longer, but you lose the sense of urgency of actually needing to do something like that. I can guarantee you that hyper Bitcoinization would happen pretty much overnight if hyperinflation starts happening across the globe, right? Because then people have no option. They have to do this. And we've seen this. We've seen it in Argentina. We've seen it in Africa. We've seen it in Brazil, right? Where when you start to really have debasement of assets, people will flow into digital assets these days. And the biggest difference that we have today compared to where we were maybe a decade ago is that now we have an escape valve, right? Capital controls always happen in these situations, right? As I said, like in Brazil, you couldn't move your assets outside of Brazil. But now, nobody can, Bitcoin is, you don't need permission, right? You download the wallet, you can receive Bitcoin from another person. You just need an internet access. Sometimes you don't even need internet access, and you're going to get a Bitcoin transaction and you broadcast it later if you want, right? So the point is, I think, we are probably much better position now to see hyper Bitcoinization than we were in the past. But it's going to take time also because the dollar is not going to lose value. It's going to continue to be the dollar for I think we're still going to have dollar, kind of like living parallel of Bitcoin for a very long period of time. These things don't happen overnight, right? And they don't happen in all the currencies at the same time. They're going to happen here and there, here and there, here and there, and then eventually, we're going to see this.
This is a really interesting argument of hyperinflation being better than low inflation, because with hyperinflation, like there's no discussion. There is nobody saying, "Hey, everything is fine." Like if the prices go up like 2 times every month, there's no discussion of like, "Yeah, it's fine. It's just temporary. Like it's okay. It's like not that bad." If you have inflation rates of, let's say, 4% or 5% or 6% or 3%, there's a lot of people that say, "Ah, that's okay." Like you sound a little bit crazy if you say, "Oh, like it will all go to zero." Like you cannot trust those currencies. People will call you crazy because they are investing, or like they're having the money in the euro, the dollar, the yen, and it is kind of stable. Because if you look like month to month, they're like, "Yeah, like I can buy as many bananas as I can buy last month, and roughly the same amount of milk that I had last year," and then they are happy. But if the inflation rate is like 50 to 100% every month, or even every year, they're like, "Oh, wow, like there's no more discussion if it's bad or good. Like it's just bad in everyone's eyes, and it's a shock to the system, and then you have to do something against that." That's a really, really interesting point.
We also normalize the fact that people normalize the fact that 2%, even 2% inflation is okay, right? Say, "Oh, it's okay, that's expected." It's actually it's worse than that. We'll say it's healthy. It's very healthy to have 2% inflation, right? I mean, ethically, and if you look at the basis of monetary ethics, it makes no sense, right? Because the fact that you're getting that 2%, it's not because there is some kind of like equal distribution happening, or growth or whatever. It's not. It's just because of money printing. Somebody somewhere just inflated your base by 2%, right? With a push of a button, where the other 98, 100%, right, depending how you look at it, had to work hard to get that, had to actually, sweat to get the fruits of their labor converted into monetary assets, right? I don't have a money printer at home, right, like the central bank, but I can print 2% a year, right? And then even if even if you put the case that, yeah, but you need 2% because the 2% needs to go for better distribution, governments are extremely inefficient in distributing capital, extremely. That 2% is not going to be well distributed. That 2% is going to go to those that are closer to the money printer, right? It's not going to go to the causes where it should be going. And I think the market should be doing that as well, right? We should all be engaging in charity and different things to help the market and help different people and support your communities, right? I think that's a much better system than the one that we have right now, which gets, imagine a country like the US or Brazil where massive populations, massive concentration of capital in the hands of a federal government, right? 2% is like, you're talking about, astronomical numbers. They're in the hands of a few people to be deciding what to do, right? I can't see a world where all of that is good, right? And that's ultimately, this is why I end up always going back to, even with my financial background, right? I always go back to Bitcoin. Like, this is a much better system than the system that we have right now, right?
It's very interesting. The question of like, if inflation is not that bad, why why do we need taxes then? Like, if we can just print money and like, it's like, okay, if we can anyways print, and there's like, let's just print the money that we need and like erase taxes. It would be awesome for Bitcoiners because we already opted out of the currency, and then other people get inflated away. But it would be a highly unfair system for everyone that is not educated, I guess.
It's funny because like, in a lot of, we're going back to real estate as we were discussing real estate, right? Particularly here in Brazil, real estate taxes are fairly high, right? And I always have this conversation. People say, oh, what, I don't like Bitcoin. I prefer to own real estate. And I'm like, yeah, the real estate, it's not yours. You know that. They're like, no, 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 it's mine. I can do whatever I want. It's like, yeah, stop paying your taxes to see what happens, right? The government's going to come and take it from you. And how much you're paying taxes? It's like 5% a year in the property. Like, yeah, so you're renting your property, right? Yeah, that's what you're doing. You're renting your property for the government. They are the ultimate beneficiaries of your. And guess what? You die. In some countries, you actually have to pay even more taxes on that as well, right? That's also not ethical. The fact that you the work that you did for your whole life, right? Can be taxed away and will be taxed away to zero if you don't do anything to protect it, right? Uh, it's also this thing that got normalized, that taxes started as small amounts, it started growing, 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 growing. It's even worse than monetary inflation because you have places like in the US. Like, I remember I lived in New York City. If you added all the taxes that I had with the federal, state tax, right, everything, you're getting like to 40 to 50% of taxes every year. That's insane. Where's that money going, right? You're really getting any of that money back. And why do you have to work, 50% of your time to and be a slave of the government, right? Instead of just being able to not pay that, right? So, I don't know if I'm going to live to the time of seeing, a global tax reform. But maybe, the start of a monetary reform that will lead to a global tax reform is something that, we'll start seeing at some point. But it will also take time in my mind.
Yeah. You mean a global tax reform that is kind of everywhere the same in the world?
I think it's going to be, it's going to be driven by individuals, right? That they're going to come to the conclusion that, they can just move around. That is happening already, right? How many people are leaving the UK? How many people are leaving the US? I mean, you tax people. Europe, I mean, you know this better than I do. It's the prime example of that, right? And that it's game theory. At some point, it takes time because you have an emptying of talent, people leave, then you have an empty of the of the total income for the country, right? Then you have all these other places like, Dubai prospering, right? And then kind of like at some point there will be an equilibrium. Does it mean that it's going to be coordinated? No, it's just going to be, it's game theory will lead us to, I think, a place where, it's not right to tax 50% of people, right? Because the people that can leave will eventually leave, and even those that can't leave will eventually leave as well, right?
Yeah, I think also I found the Laffer curve example really interesting, where you cannot raise the taxes and expect more revenue for the state, because at some point, A, people will leave, and B, people will cheat. And we see that. I mean, Austria, I think, is a very prime example. There's a lot of black, how's it called in English, actually? There's a lot of work that isn't documented, like illegal work, however you want to
Black
call it,
market.
especially,
Yeah, and they are black market. Yeah, like especially in the construction industry, it's crazy how much that is the case, and it's funny because it gets discussed in politics, and they often say the secret backbone of Austria. If that work wasn't done and if that isn't existing, the Austrian economy might actually have a problem, and so the politics don't really even want to do something against it because it might just break the system to a certain degree. But it's always a funny thing when I hear like socialists saying like, oh, we should just like increase taxes because then we have more money in the state and we have more prosperity in the country. I'm like, that is so wrong on so many different angles.
Exactly. And it's also, the premise is that the people who are going to get this capital are actually going to allocate the capital well, which that it's already broken, right? We know that's a fact, right? Governments do not allocate capital well. So even if they did, just taking away from one person to give to another, it's robbery, right? That's the definition of robbery, right? And it's crazy, man, because it's like inflation. It got normalized, it got accepted, right? The same thing that people say about a 2% inflation is needed, otherwise the economy is going to collapse, right? They say, a 40% tax is needed because otherwise the economy will collapse. When both of these are completely wrong, the world would be a much better place if it had no inflation and very low taxes or no taxes, right? But to get there, I don't know. There are good ways to get there. There are bad ways to get there, right? I don't know how we're gonna get there, but eventually, I think it's unavoidable. And I think currencies like Bitcoin and just thinking about just as a currency now, it's an escape valve, right? That people can just exit at any time, and just like they can pack their things from the UK and move to another country, they can get their currency and put it in a wallet and move it to anywhere that they want, which is something that people didn't have in the past, right? And I think this mobility will lead to the mobility of capital, the flavor of people, will lead to to this. We call it a tax reform. When you say reform, you think about it's kind of like, as you said, coordinated. I don't think it's going to be coordinated. It's just going to be an beautiful act of the market, right?
That's a really good point. Taxes. I'm currently writing on the thesis that I will present in Prague, the Great Capital Shift, and I just realized I haven't put any efforts in showing taxes in that whole thing. I think I have to rewrite a few things, but that's just for me as a small note for afterwards. So thank you so much for that also. I want to get for the last topic of today into Bitcoin mining and energy a little bit before we close off the podcast. Maybe as a starting point, what is the relationship that you see between energy and Bitcoin, or like energy and money in general? What is kind of the fascinating relationship between those?
Yeah. Energy is it's the purest language of the universe, right? And when we talk about Bitcoin is rooted in proof of work. Everything that we talked about, the fact that governments can print out of thin air, it disappears with Bitcoin because it's grounded and rooted in energy, right? So you need to spend energy in order to produce this asset. It's not that's just on a monetary Bitcoin part. That's actually a very good thing, because otherwise, if we didn't have that, then we have all the issues with double spending or everything that we know. So energy is needed to secure the network. Then there's this misconception also that I hear a ton, and particularly now we have these conversations even with governments, that energy use is inherently bad, right? Energy use is not bad. Energy is what drives human progress. There's a direct correlation, 1-by-1 almost, that countries that use more energy actually have more progress, right? So that also means that the opposite is true, that less consumption of energy, it's actually bad, right? I lived for a while in the middle of the Amazon in a place that had no energy. We're doing a project there. And it's the reverse of progress. Like, people weren't dying of hunger because you had, of course, the river, you had different things, but they were not educated. There was poverty. There's a lot of illness, right? So the lack of energy is, it's not a good thing for human progress, right? In fact, I would like to see us using more energy, not less energy, just that we need to use it more efficiently. And that's the other point, which is, people think that the energy is like a pie with a fixed size, that, if you're taking a piece out, you're actually taking a piece out of somewhere else, right? I had one of these conversations where somebody said, well, but if we give you guys power, right, we're taking power away from these poor communities, right? And that couldn't be, in this situation that we were talking about, couldn't be farther from the truth. I said, listen, the power we're taking, it's stranded. It's in a place that you can't distribute it anywhere else, right? It's just sitting there. You literally have windmills in the middle of nowhere. They're not connected to the grid. This power is not going anywhere. It's not that the power that we're using there would go eventually. Can't. And this is in Brazil, where the grid is stranded. You can't put energy to the grid, because they built all of this generation, but they didn't build the grid, right? And then immediately they realize, oh, yeah, you're right. That actually may help, because if you invest there and you actually start developing that, then maybe we can develop a way to, develop the grid, get more power to the grid, and that would actually help, because then the pizza pie is expanding, right? So the more energy you use, the more efficient you use the energy, I would argue the better it is for humanity as well, right? And I think Bitcoin is going to drive a lot of that. We talked in the beginning about, different total addressable markets for Bitcoin that Bitcoin would capture. And everybody talks about the monetary premium, all of that. I also think Bitcoin is going to capture a lot of the premium in energy trading that we've seen it. And I'll tell you how. I'll go back to the example of Brazil. I'll tell you the full story now. So we went to this place, northeast of Brazil. If you look at the Brazil map, in the northeast, there's this kind of corner in the map. It's one of the sunniest, windiest places on Earth. Very windy, right? So starting 10 years ago, 15 years ago, the government starting to put a lot of incentives for people to build wind and solar farms in that area. Massive over construction, right? But, again, to our point about governments not being very good in allocating capital, nobody stopped to think that, oh, maybe you will need distribution, right? You need to build the grids, you need to send this energy somewhere else. And there was very little capital that was invested in distribution, right? So the result is now you have a situation in Brazil, massive. This is happening across the board with energy companies, that they're having to curtail. But when they say curtailment in Brazil, it's not like in Texas. In Texas, if you're mining in Texas, like I say, we're going to curtail, it means that they're shutting down the power for the miners, right? Because they need to send the power somewhere else. In this case, they're curtailing the energy at the source. They have to shut down the wind turbines, because if they put the energy to the grid, it will overload the grid with too much energy, and it will collapse the grid, right? So our approach there has been, okay, we have Bitcoin mining, extremely flexible load. We can turn machines on and off, at a dime. Very portable. We can put machines anywhere. Different than an AI HPC. We can mine, the middle of the desert with a Starlink if we need to. Not ideal, right? Of course, there are other issues with that, but we could if we needed to. So it's probably the most flexible way of consumption of power load that you can think about in the world, right? No other industry can shut off at a dime. If you own a car manufacturer, a steel factory, right, you can just shut it down. Bitcoin mining, we can turn it on and off, again, at the flip of a button. Don't want to do that too much, but because then, of course, you start to damage your machines. But much more flexible. It's like 2 orders of magnitude more flexible than other industries. And we're starting to see, utility companies, energy companies, and eventually, I think even governments are going to realize that, this is a way for them to actually monetize and to capture and to be more efficient in the way that they use the energy that they have, right? Because I can guarantee you, for that guy that builds the wind generation, that has the turbine, bought a turbine, right? The capital is sitting there. It's much better for him to have a Bitcoin miner there in the periods that he's shut down. And it's much better for everybody, right? You're generating more assets for the world, right? The world is a better place because that's being done. And it's just like, I think, the things that we saw in Bitcoin, where there are all these preconceptions. It's exactly the same thing with energy. And it takes time, right? You have one of these meetings, 2, 3, by the 4th, we had companies that we've worked on, that in the beginning, they would say, okay, we'll do this with you, but we don't want to touch Bitcoin. We don't want to know about Bitcoin, right? You just pay us every month or every day in dollars, right? another beautiful thing. It's daily settlement, right? Different than any other assets. Like every day we mine Bitcoin and we can pay the partners every day, right? So we tell them, okay, we're going to pay you dollars every day, right? And then they start to learn, they start to understand Bitcoin, they start to really grok what it is. And we've seen some of them say, no, you can actually just, here's my wallet, you can send me Bitcoin here. And it's a good way for them to actually build a Bitcoin reserve as well and to be long-term, benefiting from all the monetary properties that we talked about Bitcoin, right? This partnership between, the best monetary asset ever invented and the best flexible load ever invented, I think it's going to create a market that we really haven't thought about and we haven't seen it, and where utility companies are going to be mining, governments are eventually going to be mining in some sort of way or incentivizing mining, right? Because that's going to drive more innovation. It's going to drive better energy production for the rest of the world. The other thing is that, we talk about energy as being consumed, right? Energy is never consumed; it's transformed, right? So it's not going somewhere. It's not just poof, disappearing. You can't do that. It's going to be transformed either in heat or in something else. In this case, we're transforming energy into a monetary asset that you can use later, right? It's much better than just throwing it away.
Yeah, also, I hate the whole framing that they sometimes do with, oh, like using energy is bad, or like more energy is automatically worse. I think like more energy is usually better. Like it shows prosperity in a country. I think you mentioned it right in the beginning, where like if you have a country that uses less and less energy, that's usually a bad sign. It's usually a sign that there is decay going on and not progress and innovation. So there's this, I think this whole thing of, oh, we have to slow down, we have to not use that much energy, we have to like do. I think it's just really bad, and it's a sign that country is not in the right, is not going in the right direction. Energy expenditure, innovation, that's what we need, and not like, oh, let's slow down. Because if we spin that thought further, like, no, if less energy is better, no energy is the best, right? Like if that would be the case, it's completely hilarious. But I think the environment and energy thought around Bitcoin is kind of dead. I don't know. I don't hear it anymore. It's something that maybe you hear it. Yeah. Do you still hear this like thought?
Some, but the good thing is that there are so many good things that were written about this that it's very easy to dismiss, to disprove, right? You send a couple of articles, you have a conversation. So it's actually it has declined substantially, but we'll see. I think Europe is an interesting case. Like, that we, first of all, as you said, like, there is a decay in energy production in Europe, which is bad. There's a price is going to be paid on this at some point, right? I don't know how, when, where, but that, it's undeniable. And it is still one place where we see some of the FUD happening, right? Like you go to the Scandinavian nations, they're still talking about, we don't want Bitcoin here, we don't want Bitcoin mining here. Even though they don't care that AI HPC can be used, right? They see Bitcoin mining as this bad thing, which I think has less to do with energy use and more to do with they don't understand Bitcoin as an asset, right? But yeah, it's the battle we, at Electron, we fight pretty much every day, is to show to the world that, we have this very good monetary asset, right? We started Electron because we were all Bitcoiners at the end of the day. And then when you couple that with energy and the way that you can better use energy and, that you can monetize on the energy, things get even better, right?
Really cool. We get slowly to the end. I was curious about one more thing, like how you look at that, because I think you interact with a lot of people around Bitcoin. What do you think is currently still the number one thing that people don't understand about Bitcoin yet in 2026?
It's a good question. I still think it's not that they don't understand. I think that we still see a lot of people coming into Bitcoin with frameworks on their mind that are just wrong to start with, right? It's actually worse than not understanding, right? Because not understanding, it to not understand something, you have to try to understand something, right? In this case, they don't even try to understand because they think that they already know, right? And I think that's more dangerous. That's even worse than, because if you have curiosity and if you want to try to understand it, if you sit down and if you read enough, most people that I know that spends time to really understand Bitcoin, to really dig deep into like the different, it's very multidisciplinary, right? So you have to look at philosophy, you have to look at computer science, you have to look at economics. The people that eventually do that, they tend to get there. They may not become, a Bitcoin maximalist, but they will know enough to at least own some Bitcoin in their portfolio, right? But definitely we still see a ton of that, particularly in the institutional side of the business. That I can't tell you how many meetings that I'll get with that, people say with an absolute conviction that things about Bitcoin that I know are just not true, right? They're like, oh, this, somebody can just print this out of thin air, it's crazy things like, oh, there's a back door in the Bitcoin code. They're like, oh, the Bitcoin code is open. You can read it, right? It's open source. It couldn't be more transparent than that, right? That still happens, particularly I think on the institutional side of the business. But to your point, I think gradually this changes, and Bitcoin is above and foremost an individual revolution, right? It starts from the individual level, and I think ultimately, you'll see that penetrating into institutions, and it will change at some point, hopefully.
Yeah, 100%. It's just a matter of time till we get more and more and also I don't know how you look at that, but I think we don't need to educate the whole world on Bitcoin. I think it's the same way as most people don't understand how the TCP/IP protocol works, and they still trust that their WhatsApp message makes it to the other person. The people don't understand what a combustion engine is, and they still drive with their cars and get into the bus and go on a train. Like it's people don't understand the underlying technology and still trust it. And so I think we'll get to a point where only few people actually understand what Bitcoin is. And I would even make the argument only very few Bitcoiners understand to a deep degree how Bitcoin works and how Bitcoin interfaces. But a lot of people already trust it. And so I don't know, like I think we just have to change the narrative, and we don't have to educate everyone on every single detail on Bitcoin. And I think time will do a lot of good things for that.
I agree. Completely agree.
Really cool. Then we have a routine for every single one of my new guests on the podcast where I ask the question, what can we learn from you besides Bitcoin?
Another big passion of mine has always been endurance sports. So I'm an endurance sport aficionado. I've completed 13 Ironmans. I've ran more than a few ultra marathons, and I tell this to all my friends, but I truly encourage people to do things outside of their work. Be healthy. For me, this is the way that I keep my sanity, that I keep my mind going. It's the best time for me to think about things is when I'm out in long runs, right, or in long bike rides. Yeah, and there are many parallels with Bitcoin as well, right? It's a sport that is very proof of work oriented. You can fake it. You can just, somebody can just say tomorrow I'm going to go and do an Ironman, right? You need to train. So it's another. I can talk about that for days, but a different subject. It's definitely a passion outside of Bitcoin of mine.
If you have never tried training for an Ironman, please don't try to do it in one go. Like you'll most likely die. But yeah, that's a really cool thing. Like sports. Actually, I'm trying to conceptualize what is the most interesting topic for Bitcoiners that is outside of Bitcoin, and I think health is the one that most, like, because in health there's like diet in there, which is very popular in Bitcoin. There's sports in there, like workout and going out in the sun, and like all those topics are in health included. And I think if we have a second topic for Bitcoiners, it would 100% be health. And also when I reiterate through all the questions, I think I've like now around 500 or 600 different guests on the podcast, over 700 episodes, and I asked all of them, what can we learn from you besides Bitcoin? The most common answers were like health, family, and I think then religion. I mean, those are the top three ones. If I didn't do any data on that, but I think if I had to guess one, those are the three top ones as answers in that category.
They are all ingrained in one thing: time preference. So when you really understand time preference, right, it makes you want to be more healthy because you understand, the limited lifespan that we all have. You want to get closer to family. The same thing I have. My daughter is going to college now. I can tell her, like, it's hard to see her leaving home, right? And then you recall when she was 2, 3, 5 years old, is still at home, right? So all of these things, I think they all go back to time preference. At the end of the people that really understand time preference. By the way, it's one of the first things that you learn in Austrian school economics, right? It's how important time preference really is and how we need to really value time preference. And you can just put a number on it, right, at the end of the day. So I think these all things are very tied together on that.
100%, I agree. Really cool. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you a fun one. Which is the best Bitcoin conference you are looking forward to attending this year in 2026?
Oh, it's actually an easy question. For a long time, I didn't go to conferences. And, I would say that for the first 4 years that I was in Bitcoin, I didn't go to any conferences. I would watch them online, when they had something broadcasted. And there are some conferences that I think became too big. The conference that I think still strikes, I think, the good balance of having like good content and at the same time, having, being very Bitcoin focused. It's Plan B in Lugano. I think it's a very good conference, small setting. If you want to go to the technical side, they still have a lot of good technical workshops happening that you can go and learn about, the latest developments. I love tinkering with stuff. So there's always like a good workshop to look into tinkering stuff. And if you want to go to the macro side, the main stage has some macro panels as well. So I think in my view, it's probably the best conference that we have on the year. Vegas, the Bitcoin conference, I think it's another good one because everybody's there. So last year I was there. I didn't even go into the conference. I was just meeting people. So it's a good place to meet people and people from the industry, right? But it's a very different vibe. I think, people, if people can choose two, I would choose probably these two, because then you're going to have two very different places, right? The one is in Europe, in Lugano, the other is in Vegas. They couldn't be more different also on that side. I think that would be my suggestion.
That's like Lugano and Vegas. I was at both of those conferences last year, and I'm not sure if I make Lugano this year again. I hope I can make it, but it might overlap with a wedding of a friend of mine. But if I'm free, I will definitely also go to a Lugano. But like Lugano and Vegas might just be the polar opposites of what a city can look like. Between like Vegas is how I imagine the most pure fiat city ever, and Lugano is one of the most pure sound money city ever. And Lugano has embraced Bitcoin a lot. The mayor has embraced Bitcoin a lot, and the people there have embraced Bitcoin a lot. So if you have visited both cities, you will know what I'm talking about. And even just like if you just type in Google Lugano pictures and Vegas pictures, if you haven't been to both cities, like you will immediately see why I call Vegas a fiat city and Lugano a Bitcoin city, sound money city, like a gold standard city kind of a vibe.
Yep, exactly.
Really cool. And thank you so much, Rapha, for being on the podcast. It was a lovely conversation. Thank you so much for giving us so many insights on your life, on your expertise and all the things that you're bringing to the table. Before I let you go, where can people find you, ask you questions and reach out to you?
Yeah, easiest place is Twitter, probably X. So it's Alpha Zeta, Alpha and Zeta all together. I'm there. You can also, Electron Energy has a Twitter account as well. You can follow us there. Easiest ways is there.
Awesome. Then thank you so much, Rapha, for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.